Hi, Bo here from High Tech Investment, and welcome back to the channel where we today are going to talk about hedging. We are actually going to show you a bit on how we are hedging the profit retriever. As you might know, the profit retriever comes from Expert Forex, and Alex is normally the head of that particular company here, always mentioning that if you trade the profit retriever, you should set it up in such a way that you don't get the huge drawdowns. But we all know that that is simply impossible, and recent events has definitely shown that it is possible to get huge drawdowns, even though you try and accommodate for that the best you can, even though all the testing that you have done shows that you can keep it within reasonable limits of maybe 20 or 30%, which is fairly okay when it comes to the profit retriever, maybe a bit high when it comes to other EAs. But we're going to focus on the profit retriever, but obviously you can also use this hedging strategy on other EAs if you feel like it. Now, this is our basically information and development over time with the profit retriever. We've been trading this one now for more than a year. And obviously we have seen from time to time that we have some trending currencies where the profit retriever starts off in the wrong direction and then it just continues to go worse and worse. So we've been playing around with not the settings within the EA itself more than normal, but we have definitely tried to develop a bit of a strategy on how we can actually accommodate some of the losses, how we can maybe also move the target line of the profit receiver itself. We're going to have a look at all this. And in the beginning also, we're going to have a closer look at exactly what is hedging. And what is the definition of hedging. Basically, we asked ChatGPT, so if it could define the definition of hedging, and it came up with this here. Hedging is a risk management strategy used to minimize or offset potential losses by taking an opposite position to an existing investment or trade. So that sounds pretty simple. So you have one going in one direction and the other one in the other direction. But obviously trading is not that simple. And obviously we will also ask the ChatGPT, can you give us an example? And it came up here with the example of an investor who holds a stock that they believe may decline in value, may choose to hedge their position by simultaneously taking a short position in a related asset, such as an index fund or a future contract. If the stock does indeed decline in value, the investor loses on the stock will be offset by gains on the short position, though reducing the overall losses. Now, this is one way of doing it. There's obviously many different ways where you can use this for stocks. You can use it for indexes. You can use it for Forex. You can even use it for crypto. And we're going to show you some of the details also in here where you have oil, you have metal, different ways of things are interacting with each other on the markets. So let's go and have a look and see exactly what hedging looks like on the different graphs. So the first hedging strategy here is the gold strategy. So that is gold versus EURUSD currency pair. And that is known by most of the traders. They are using that a lot of times, especially to trade gold. Now gold is up here, so in the blue, and you see the blue markings going here. So it's basically coming from a lower part and going to higher. And at the same time, you see the EURUSD currency pair is basically dropping down. Then both of the pairs are trading sideways together with the gold up here. And then as you have a gold price that is dropping and basically overlapping here, you will see that the EURUSD is then increasing overall. So basically going opposite directions all the way through in a trending fashion. And then at the end of the day, it ends up trading similar sideways as you can see here. So that is a good way of trading gold, as many people are using the EURUSD as an indicator to see where things are moving. Now, if we also have a look at oil versus USD CAD, so in the Forex, and again here oil we have in the blue section here, and we can see that oil is on the rise, and at the same time you see the USD Canadian is actually dropping off. And then obviously this is the Forex market, so sometimes you'll see that when things are moving up here, you can see they're both going in the same direction, and then they follow each other up, and they go into a bit of a mix again with up and down, so in a short period of time. And then you have a really good breakout here again. At the end of the day, the oil price goes up, and then the US Canadian is actually dropping right up until the trend reverses, and then you will have a drop in oil price, as you will then have an increase for the USD currency, USD and CAD currency pair. If we try and pass this over just to forex pairs in between, then you have, for example, EURUSD and USD Japanese, and the two graphs here is both on 4-hour time frames. And even though they don't exactly match, because welcome to Forex, nothing ever matched, nothing is ever 100%, but you can definitely see that when one goes in one direction, the other one goes in a different one overall. But obviously you have spikes, you have some retracements in between, but the graph is very clear on that matter, that when the EURUSD currency pair is going up, then US Japanese is going down. And those are two, which is pretty clear on the graph itself when you look at them. But if you take a quick look at, for example, here, New Zealand Canadian and New Zealand USD, you will then find that there's two currency pairs here. They are actually moving in the same direction instead of the opposite. But you can still use that as part of a hedging strategy, as long as you know which one is going which way. So again, if you have a look at the trends, so when one goes down, the other one goes down here. When one is basically moving up, so is the other one. And then when they're moving sideways, so are both of them. So these are some of the ways where you can find different currency pairs, hedge them against each other, so you have a chance of better understanding the markets and where things are going. Now, for example, if we use the New Zealand Japanese up against what you just saw here before, the two other ones, you can clearly see that this is not really compatible with anything. It is actually on exactly the same time frame, so but a huge difference in here. So this is definitely not one to use for your hedging strategies. So moving over closer to basically what we are looking at here today is the profit retriever, and we are looking at individual currency pairs, and we just picked a currency pair here, which in this particular case is the EURUSD. And this is not hedging in the classic sense. Now, why is that? Well, because normally, as we spoke about earlier, you have either metal and you have Forex, or you have stock and you have an index, meaning you have two, or you can have even three different types of indexes, metals and Forexes mixed up. And you normally try to hedge those in between. And in this particular case here, we are only working with one currency pair, but still what it means, and it still has the name of hedging, but it's just not the classical style. So what it basically means here is you can hedge if you are coming in like we have here. You can hedge your strategy by putting in both a buy and a sell. This is a bit similar to what you have on the grid train multiplier, which is also delivered by Expert Forex, where at every single grid level, you basically get both a buy and a sell. But again, over time, that can become a bit of an issue if you don't close them off. So here we're only talking about individual trades. And as the price is going up, you can see here, then your buy is cashing in quite a bit, but at the same time, you are also taking a bigger minus with the EURUSD. And you can then decide where to get out. And obviously, this takes a bit of a strategy to understand exactly how that works. The good part, of course, would be to basically close off somewhere around here where you have the error for the buy, and then basically hopefully get out somewhere down here where you can then, or down here, where you can most probably come out in zero or only a small minus, and then overall you will still have a good profit in between the two. But it takes a bit of training, it takes a bit of getting used to. And you also need to understand a bit on the resistance levels. So you have to go in and have a look and have a decent understanding of the individual candles and support and resistance levels in here. And that's what we're going to also take a closer look at when we now go over to individual graphs and start putting in some buys and sells. So we had a bit of a play with the graph here itself, and you can see the profit retriever is actually trading here. It's had a small drawdown and then profit reached, and then it went into a sell, which was great. And from there on, there was a bit of a mix. So this was over the weekend again, ended up. So basically putting in a buy, and you can see the buy in here. And the first one was set was 0.14 lot, and in this particular case it's 0.14 lot every single time it sets it. You can see it's setting them as they go down all the way through and all the way down to here. So it enters in a certain grid level, and that grid level slowly but surely also starts to open up. Depending on how many levels you are down, that is something you can set on the profit retriever itself. But in this case, it was a buy, and as you can see, the trend is going against us. So what we did here is we had one that we set very early on here just to show you. And as the trend is further going down, we are putting in a stop loss on the first trend. And basically we are looking at a sell of 0.25. So that means at that particular point here, we only had 1.14 in here. And as they open up a second one, we are basically now in zero. And we then decided to see if this gonna continue or not. And you can see it went a bit of sideways for a while. And we then set up a second one where we say, okay, if it reached this particular price level, we're gonna do another sell, and again of 0.25. And as the price continued to go down, the profit retriever will set all the new buys. It will continue like nothing has happened, and it will not interfere with what you are doing manually here. We set it up, and then as the price is dropping, so somewhere around here, we are putting in another stop loss to secure that we are not really losing out in case the price all of a sudden spikes in the wrong direction. And further down here, we are then looking at some support and resistance levels. You can't really see them on this particular graph here, but we add another one in again, and we leave the profit retriever. We leave it running, as you can see here, but we are setting various levels in along the way, and basically both looking at support and resistance, and also the grid levels, depending on how the profit retriever opened the individual trades. So that's what it looks like, and that means also that if the price now goes back up to where you have the profit retriever itself here, where it cashes in, it will basically close out here with the small profits overall, and it will also take this one out, close with a small profit, and then it will hit this particular one up here, and then the profit retriever is back into zero. And then if it goes further up, it will take the stop loss up here, or we can basically say, well, we're going to cash in that particular one once we hit the target. Once the profit retriever closes, we can then either leave it as it is, because we will never lose money on this, or we can say, okay, we are still expecting it to further go downwards, so maybe we'll take in more profits. So there's various different ways where you can do this. There's also ways where you can basically get all the profits from the 3 here and start closing off some of the first buys up here. But more about that a bit later on some of the other graphs here. So I have another example, and this is the one we're going to use here today. So this is British pounds USD. And in this particular case, we can see that has been a drawdown earlier, so when it was trading, and then it goes a bit more sideways. You can see it's cashing in quite well, $109 and then 14. So again, when it has more than one trade that goes against it, the profit retriever will basically just come out, and with whatever setting you have in this particular case, most probably somewhere around the $15 or $20 mark. And then if it goes with it, then it cashes in up against the 108, 109. You can see 2 times 111. And here we have a huge dip. So in the graph itself, it comes very, very quickly. So it continues to set sell indications. And as it closes the last one here, then the price goes in the opposite direction and obviously continues to set quite frequent trades in here, and it continues to go up. Obviously, there is now a good chance and reason that is coming down again, but this could indicate that you could have a drawdown of, let's say, $4,000 or $5,000 in here. And if you are trading this on a $10,000 account, that's starting to be a bit scary for everybody. So what do you then do? We have gone in and basically expanded a bit on the part where we are just talking about the price, where it's actually starting to shoot up here again. So British pounds, USD. So let's have a look at it. And what we see here in the bottom, basically we have a range of cells starting down here with 0.2, and then we can see the lot goes to 0.13, and then it continues to be at 0.12. So that is the setup. And you can also see the grid levels is all the green ones that you have in here. So we see that the price is going up here, and we're basically looking at the support and resistance levels within that particular graph that we have here. And if we look at here, we have a couple of spikes where the price goes up here and then it turns downwards again. And everything looks good to be closed off. Don't forget that at this particular moment, so all these open trades are not here. So that little bar, which is the small little profits that the profit retriever will calculate to get out of the trade, will be further down. And unfortunately, it didn't receive it when it came down here. It did come very, very close to it, but not close enough. So we then have a look and say, okay, as the price is going in the wrong direction again, you can obviously put it in a bit earlier if that's what you want. Or you can have a look at the support and resistance levels and say, well, last time here, it didn't go higher than this. So most probably it's going to turn around again. And as you can see, it almost did. So it did go slightly higher. It didn't pull in for the first buy that we wanted to do in order to start hedging it. It went down again, and then from here on it entered the first trade itself, and from there on the price is going up. And this is now where you put in a stop loss to make sure at least you get your risk covered, and you just get in a few dollars if that is the case. But as the price then is going up, you can see that the price is coming down again here. And obviously that means that you are now out of the trade. You haven't really lost anything. You only made a few dollars. And the price goes down, and you again try and hold the resistance level as you had before. So you now put in another buy stop in this particular case here. And you say, okay, when the price gets up to here, we're going to do another one. And again, we're going to have a look exactly the lot size a bit later on. As the price goes up, you now enter the first buy once again. And as the price goes up here, there's also a chance you put in your stop loss to make sure that you are now covered on this particular one. And then the price turns also, as you can see here. Now the next one could be that you can see a price turning up here and then dropping down. It never really pops out, and it doesn't really take out the buy. It comes very close, but not close enough. You now have another couple of resistance levels. So you had the first one here, the second one there. And as the price goes up again, you say, okay, I want to put in a second one in here. And it could have been either on this spike, or it could be on the next ones you have over here. And then again, as the price further goes up, at one point you have to set in and manage your risk. So basically put in your stop loss, again, just a bit positive. And again here, unfortunately, the price will drop down. It will take that one out and this one out on the stop losses you have down here. So that is pretty clear. But then you again have support resistance levels, so meaning you are putting in another buy stop in here. So I'm trying it all over again. And this time around, you can see that it continues to trade upwards. And you put a new one in for this particular one, just above where you were here last time. And in this particular case, you are now cashing in, or it's triggering up around here. So, and from there on, as we said, it will go up, and then it will basically, as you go up here, you have stop loss on both this one and this one. But as the price goes down, the stop loss will basically go out the window again, and you have to start it over. In that particular case, you can obviously start a bit lower here, or you can start at the same resistance level as you had before. So, and this particular time, you have a second one in here. Once it reaches up here, you put another stop loss in. So now both these are basically secure. And as the price continues to move up, you will put more in again for this particular one. And we can see that I think the buy we did was about 0.4 at one point. And then the price goes up, and you cover that one also with a stop loss. So now all these three are actually covered. Obviously, again, the price is now changing, but what you are trying to do with putting all these stop losses in here is basically you now have a bit of profit basically in pips from down to here to up there, from this one to there, and this one here. And that obviously creates a sum of money that you wouldn't have had if you wouldn't have intervened manually here. And what we are looking at sometimes is we're having a look and seeing this one is obviously the first one that was set, the 0.2 lot size. This could be at minus $1,000 at that particular point up here. And if you now have, let's say, $1,000 or $1,500 in between those three, one of the ways that you can do this is either you leave them and continue to just rack up the individual buy stops, because if you have enough of them, your equity balance will basically go positive. Or you take and say, okay, we're going to cash in all these three, take the profit of if that is $1,000 or if it's $2,000, you use that money to close either one or two positions at the bottom itself here, so that the retracement doesn't have to go as far down as it normally would. So that means that the bar that you have on the profit retriever should move up. It will not, and that is again because it doesn't interfere. It's not, even though you close off these two down here, it doesn't mean that the bar necessarily have to change. So you will have to manually look at it to see when you are back in profit, but most probably you're back in profit somewhere up here in that bar, instead of the price has to go all the way down to here. So that is definitely one way of doing this. As you can see, if you decide to say, well, we're going to continue to play the game here until we get back to the original position, we are not going to close these ones off. We are simply just making sure that the equity is not being damaged. What will happen here as the price moves the other way again, it will hit your stop loss here, and also it will hit the stop loss down here. It will take both of these ones out of the equation. And again, the fun starts, you put in another buy stop here, and the same on this particular level. You can see this one also has a bit of a resistance level in here, so you have marked it up. And again, you can then try this time around to say, okay, we're actually going to cash it in and then close these two down here. So that is your options as you are developing and can see that particular trend goes on. Or you simply let them be, and it says, okay, if it continues further up, I will put in more buys. My equity won't really be hurting anymore. But the best thing, and the way that we normally do this, is basically try as soon as possible, when you get a chance, with most probably 3 or 4 buys in here against the direction itself, you try and close the first ones, because they are normally the biggest lot sizes. It all depends a bit on how you have set up the individual profit retriever. Now we jumped over to an Excel here just to show you in a bit of a better format. You have individual trades set up by the profit retriever itself. You have trade 1 here and all the way down to 12, as you saw on the graph before. We have the cells that is on this side. The first one again was set at 0.2, the next one 0.13, and then 0.12, and then continues like that. And then here in column B, you have the total lot sizing that you have ended up with. And then we have column B. This is where we are then going in, for example, to set up buys. And again, the lot sizing that we are just using for this particular example is 0.35. What we normally mention here is you have to look at the overall lot size. So if we are going in here at trade 7 and saying now we want to start hedging, then I do suggest that you put somewhere a percentage in of where you need to be. You can see you are currently down 0.93 lots overall. And you don't want to start with too small a lot size, because that's really not going to help you much on your equity. It's going to continue to go down quite fast. On the other hand, you also have to be careful that if you put in a lot size that is simply too big and the price basically turns as you set it in, you could end up with also a big minus on the other side. So we are trying to play around with numbers. It depends a bit on how you start off. As you can see here with the 2013, and if it goes all the way down to 0.01 or not. But we are trying to do somewhere around 25 to 40%. And in this particular case, we decided, okay, we're going to go in with a buy lot size of 0.35. And then you can see the profit retriever continues to add another one. So we are now down here at that particular one, and we are doing another set of buys. And again, we are using the same percentage as the first times. You can vary it if that's what you think, especially if obviously something happens on the trending lines. Now, what does that mean? We put a bit of color on this. Again, the same parts. Now, what we are covering, or what are you covering exactly when you are trying to hedge this? Well, the first one on the 7 is the 0.35 that we have used here. And that basically locks in the movement of the first lot sizes you have here. So the biggest two lot sizes are basically now in, not in zero, because obviously you still have minus on both number 1 and 2, but they are not growing like only these ones here. If you continue, you will have 3 to 7. They will continue to grow if the trend goes against you. Now, if it continues to be so, what you are then moving on is you are now down at 0.15 lot size here after 9 trades itself. So you only got about 30% covered, or 35% in here. So you're now putting a second one in, and that means that you're now up to 0.7. So again, this is about 25 to 40% of what you have in your total lot at the time. And that one now also not only has locked this with the first one, but is now locking this in also in place pretty much, as you can see. And now it's only the movement from the 4 that you have that will impact further equity if it continues to go against you. And then as you moving down, you're ending up with 11 trades here now. And that now means that you will put in maybe another one again. You will cover that one. And if this again is a 0.35 in this particular case, then you have covered 1.05, meaning that it's still about 0.35 that is open. It's not such a big lot size overall. And it still correlates roughly within the 25 to 40%. You have to be careful not to go too high, as I mentioned before, because if the price goes against you, you could obviously lose out a bit. But that way you can basically lock the next ones in. And if you do that, that means that only after 11, you only have a couple of trades that are still moving against you. Overall, you have made sure that the rest is pretty much stopped. And you have to look at that particular time now, that if you have made so much money on those 3 buys in here, that you can close off the 2 in minus, or you want to continue to build on the strategy and move higher up. It all depends on, obviously, again, what currency pair you have, what kind of news is coming out, and so on and so on. So, but this is part of the strategy. This is how you can set it up. If you have this part of strategy in there before you even start switching on the profit retriever, it would certainly help you. So there you have it. This is our way of where we are trying to hedge the profit retriever if we think things are getting out of hand. Now, some of the things that we have to mention here again is that if you are linked up with the copy link trading itself, even if we try to go in and do this type of hedging on those particular accounts here, trying to help everybody, it simply wouldn't work. So because again, it is set up so with the magic numbers also here, and this is the manual trade that goes in, meaning that we will have it on our chart. You will always be also be able to see this on the FX Blue accounts. You will see that there are some hedging trades taking place in there, but they will not actually be implemented on your trades. You have to do this yourself. So that is not something that that we can help and assist with. But if you find a strategy, obviously you have multiple strategies. Again, you don't have to hedge anything. You can hope for the best. But we would like to try and see if we can save some of these accounts once in a while, because it doesn't happen very often. If it happens, it is just a good way of trying to protect yourself. And if you try not to use too big of a lot sizes, if you also try and find a reasonable grid size in between when you're doing this hedging, make sure that you are using stop losses to make sure that you are covered. And then if you get a percentage enough, then it's entirely up to you if you can close some of these trades off, so that the bar where the profit retriever or the retracement that it has to get back to doesn't have to go as far down or up as it used to be here. You can basically end up with having less movement overall. And that certainly helps you get back into profit and get the profit retriever back on track a lot faster. Or at the same time, if you are not interested in closing any of them off, it will still make sure that you are continuing to have some equity in there. You won't lose it as fast as you otherwise would. So there is definitely different ways and opportunities to build this up. But don't forget, so this is not trading advice. So this is not a training manual. This is simply just, this is the way we are doing it. We are showing you exactly how we have tried to develop a strategy within there. You yourself have to develop your own strategy. You yourself is obviously also responsible for your own trading. So only take this so as a bit of showmanship of what exactly can be done overall. Obviously, we would like to hear if you have tried something similar, something completely different, then please leave us a comment of what you have done, what you found to be working, what is not working. Yes, we know there's new things coming out for the profit retriever. It is currently also in beta testing here, but that doesn't really necessarily take care of that particular issue. You might on some currency pairs have a lower drawdown, but things could still go wrong. So you need to have this as a backup. So in case you want to try and protect your account the best possible. So I hope that this has given you some insights as to what can be done. And you can even apply some of these things to other things than just a profit retriever itself. So I hope you liked the video. Please give us a thumbs up and a like and a comment below. And I'll see you on one of my next videos. Bye-bye.